pulled up a basic candlestick chart. This is a 4-hour chart. And what we can see is this support level coming in at about $3,910. The next level is not that important, $3,966. It's more of a support area, not a resistance. And we went up to the first level of resistance at 44.40. It's based on these tops that came in on Tuesday and Wednesday. And the real support level we want to take out is, of course, 41.50 based on these tops that came in. I'm not convinced that we will see the market move and challenge the all-time record highs, although that is possible. And we can look at another chart and you can see what I'm imagining. Right now we had a primary first wave, and that took gold from about $3,350 up to this absolute top at about 41.40. Let me just adjust that up, 41.40. That concluded, and we're obviously in a correction. And so I'm looking at this as an A, B, C correction. If I'm correct about that, we'll see gold trade higher, maybe as high as 41.50, but then come back down for the final C wave, which could take gold back below 4,000 to about 38.80 and 3,900, right in that area. At that point, we will enter a new wave, and this would be a primary third wave. And by definition, a primary third wave, this is just simple Elliott wave utilization, cannot be shorter than this primary first wave. So that would take gold well above 44 and 4,500, but definitely above this recent top here at 44.40.
Importantly, I think last time you said that even if we get a deeper pullback to $3,700, it's still within a bullish trend. Is that still the case?
Yeah, I mean, in terms of absolute support, the first level that needs to be held now, it's based on this bottom here and the tails. So just about 38.90 and 38.72. So I don't think gold's going to break below 38.70, even on the C wave down, which is, of course, below the lows that came in on the A wave. And as I said, I currently believe we're in a B wave. If that's how it plays out, a simple A, B, C correction, we should see the market tap up to around 41.50, then come back down to about 48.80, and then move in a primary first wave, taking out the former record high. That's my belief.
So is it too simplistic to say that until gold breaks down below $3,800 and stays there, we can still safely assume that we're in a bull trend and investors can still safely hold, if not buy more if they're interested? Is that an okay summary?
That's a really fair statement. Excuse me. If you look, I've got a Fibonacci retracement from 33.40 up to the record highs. And if we look at the 61.8, which is a deep but acceptable correction, that comes in at 37.51. So above 3,800 is a very conservative estimate of where gold needs to hold and will hold. I'm looking at lows coming in at about 38.75, if I am correct with this ABC correction.
He's analyzing the 4-hour gold chart and highlighting the key levels. Right now, support sits around $3,910, with a smaller support zone near $3,966. Price recently pushed up to resistance at $4,440, based on the highs from earlier in the week. He believes gold is still in a correction phase, likely an ABC pattern. If that's correct, gold could rise toward $4,150 to complete the B wave, then pull back again, possibly dipping into the $3,880 $3,900 zone, before starting a much stronger third wave up. That next major wave, by Elliott wave rules, would be bigger than the first, meaning gold could break above $4,440 and potentially head toward new all-time highs. He also notes that as long as gold stays above $3,800, the bigger bullish trend remains intact. Even a deeper pullback toward the $3,750 Fibonacci level would still be considered normal in a bull market. So overall, short-term correction, But long-term bullish, a strong upside move expected once the ABC pattern completes.
Yeah, I agree. What it shows to me is that the momentum in gold superseded the level of inflation moving higher, which was slightly higher. But you can see on that chart clearly that when we went parabolic, it was kind of stagnant in terms of the inflation. It was sitting out at this level of 3%, and gold went absolutely parabolic. It's right here. I'm pointing on this chart that I doubt is coming through, but at the levels that were really, really important in terms of gold itself.
Well, let's get your chart back up on the screen and we can take a look. But okay, well, why do you think that is? Has gold become a different instrument, or has it started serving a different purpose besides hedging against inflation expectations, Gary?
Well, what I think is that the inflation expectations, gold has definitely outperformed that. And the momentum we have seen recently have been basically central bank purchases and speculators bidding the metal higher. They're jumping in also. But as I said before, the amount of accumulations in central banks has been ridiculous. And GLD has had inflows of $26 billion recently. That's huge. And the momentum is building in lieu of inflation. It kept up and moved with inflation moving higher, but it had a life of its own. It's been trading with momentum that is based on accumulation by central banks and speculators believing it will go higher. And that's what's taking it rather than inflation. It reacted to inflation. And inflation, as you said, has been persistent, sticking around 3% now. But gold has been moving higher as it's been flat. As inflation was flat, gold continued to move higher. And the fact of the matter is, the World Gold Council reported huge amounts of accumulation by central banks at record paces, China being one of the leaders in that. And the fact of the matter is, you've got central banks buying and accumulating. You've got large institutional hedge funds jumping into GLD as well as gold futures. And you've got speculative action, consumers riding this wave. So you've got all three major players bidding gold higher. And that's created this upside momentum. I mean, we're not far from the record highs. We're just below. We're at 4,036 with the record highs at roughly above 4,300, 4,380. So in terms of what we're seeing, we had an acceptable correction in gold, taking it down below 4,000, and now it seems to be recovering. We'll have to see if the momentum can continue and break above 4,150, the next level of resistance.
What's happening in gold right now is bigger than inflation. The chart shows that while inflation has been stuck around 3%, gold broke away completely and went parabolic. That tells us the metal is no longer reacting only to inflation data, it's being driven by massive momentum coming from elsewhere. And that elsewhere is very clear. Central banks are buying at record levels. The World Gold Council confirms unprecedented accumulation, with China leading the charge. Institutions and hedge funds are pouring money into GLD, with inflows of $26 billion recently. Speculators and retail traders are piling in, riding the trend higher. So instead of gold simply tracking inflation expectations, the market now has three powerful forces pushing it upward all at the same time. That's why gold is outperforming inflation and acting with a momentum of its own. Despite a normal pullback below $4,000, the recovery shows buyers still firmly in control. With gold hovering around $4,036, just below the record $4,380, all eyes are on whether it can break above the next big resistance at $4,150. If it does, momentum could easily carry it to new all-time highs. In short, gold isn't just an inflation hedge anymore, it's become a global accumulation asset, and the market is trading like it recognizes that. The combined pressure from central banks, institutions, and speculators is what's driving this powerful sustained rally.
Very, very shallow retracement from 54.70 down to around 45.50, and then it moved back up, currently up today, 2.84%, gained $1.34, and it's settled in New York at 48.89. Overseas, it is higher at 48.93. So it did come back up, and silver was really lagging behind gold for months, and then it just took off like a banshee starting back in August and trading to these not record levels, but above all-time record highs. This is a new all-time record high here for silver, $54. Never traded to this level. So a correction that's as shallow as what we saw from an all-time record high of 54 and change to 45 and change is shallow, especially since it formed a pivot doji and then began to move higher. We'll have to see if there's follow-through, but I think silver has definitely caught up to gold in terms of momentum, and we've seen silver trade to a new all-time record high, and that's a statement that it just tells you how strong this recent move in silver has been.
Do you think that silver's downside has a little more risk than gold, given its higher beta, or do you think that more or less we're going to see some stability above $45 here, Gary?
Yeah, I think that the recent move from the record highs of 54 down to 45.78 formed a base that will hold. And I think that now we're going to see silver potentially challenge the former record highs at around $54. And it's currently, almost at $45. So I think the more likely scenario in silver is a continuation of the recent bullish trend, moving higher, taking out the former all-time record high of 54.45, basis December futures contract.
Silver has been the real surprise in the metals market. After lagging behind gold for months, it suddenly exploded higher, moving like a rocket since August. The rally pushed silver into a brand new all-time record high at $54, breaking levels it has never traded at before. What's even more impressive is how shallow the correction was. From the peak around $54, silver only pulled back to the $45 area, a very mild retracement considering how far and how fast it ran. It formed a clear pivot doji, signaling exhaustion in the selling, and immediately bounced higher. That kind of behavior shows just how strong the underlying momentum is. Today alone, silver jumped 2.84%, gaining $1.34 and settling near $48.89, with overseas trading pushing it even higher. It has fully caught up to gold in terms of strength, and now even looks like it's leading. As for downside risk, yes, silver typically carries more volatility than gold because of its higher beta. But the recent price action suggests a solid base has formed around $45-46. Unless that level breaks, the path of least resistance is still upward. With silver holding strong and pushing off that shallow correction, the most likely outcome is another attempt to break the all-time high at $54.45 on the December futures.